let's talk about sideways market structure. Sideways market structure, what I believe you will see most of the time, this market structure. This is a market structure where market is sometime, it's a various use cases. What you will see, let me first change the color of this. Yeah. So what you will see sometime, the market is, let's say trying to break the high. So you will feel it's a bullish market. Then again, it's breached the low. In uptrend, the market will always break the high, okay, and always protect the low, right? That's the definition of uptrend. But here what happens? Market break the high and immediately it broke the low, right? Confused, right? Because it's breaking high also and breaking low also. So is it a uptrend or downtrend? We are confused, right? Then again, like it could be like doing this, like this, right? So when you feel a scenario when the market is going to breach, it's uptrend, right? So market is supposed to break upside, but what it did, it broken, right? And it's always need to protect the swing low. It always have to protect the swing low. It's breached the swing low also at the same time. Now, this is a point where the confusion arises in the trader, whether it's going to go up or whether it's going to go down now. It could be a possibility take a pullback and can go down, or maybe it's a part of a stop loss hunting. It simply came down, hunt all the stop loss, and again continue to the upside. That recently happened in the Bank Nifty, right? We all know. So what it is, this is called a sideways market, case one for us. You had always learned about the sideways market as a range market. You will always be taught sideways market is a market where the market is in a range. No, it's just a use case of sideways market, one of the use case. This is one of the use case. There are several use cases we learn in the sideways market. The one use case, when the market breaks up, so we assume it's an uptrend, so it was never ever going to breach this low, but it immediately breaches this low in the next move or next leg, then it's a sideways market. Because now it's going to go up and down, it actually takes time to decide for us. Actually, if you talk about 15 minutes, then hardly 1 or 2 days you will actually not able to take a decision in such market. You have to wait for the market to either again break to the upside and again make a bullish structure, or break to the downside and make a bearish structure. But until it's not going to breach, we are not able to trade in this market, because we don't know at this point, because it was just going to go up and suddenly it's breached down. Because sometimes it's also a possibility it's breached down and boom, again it will go up after hunting the stop loss, and it can continue like this. One second. It can continue like this. It can continue like this. It can continue like this. Don't you think it's possible? Right? It's breaking to the upside. Here it's again breaking to the downside. As it was in uptrend, it was not expected this swing low to be broken. Now it's broken to the downside. We felt maybe it's a downtrend, and market suddenly went up. So if you try to sell here at this point, where most of the people will sell, those who understand some basics of price action, they will try to plan sell trade here, and again they are trapped because it's an uptrend again. Some people, right, who think it's an uptrend, it's still uptrend, might be, because, kind of luckily they are guessing and it goes for an uptrend. Some people do not know, right? They are planning, like they are an option seller I'm talking about. They try to hedge it, but again they are also in losses. So it's a very confusing scenario. When it suddenly breaks up, always keep in mind, then again breaks down, then we have to wait. Why? Because this is one scenario possible which I had drawn here, because after breaking down again it can start making high rise. And the second scenario, it will take a pullback up to certain amount, then it can break it down like this, and it's possible it can start a downtrend from here. Don't you think it's possible? Of course it's possible. Of course it's possible. Of course it's possible. Right? After breaching down, it can again go for downtrend. So until the decision is pending, until this is not going to now it's not going to breach this high or this low, the decision is pending. If it has to go up, it has to breach this up like this, and then it has to show some pullback. If it has to go down, it has to break it down this low, and it has to show some sort of pullback. Right? When it's break down, then the decision is confirmed. Okay, now the trend is change, is going to go down. But sometime you will also see it's breaking down, then again breaking up. So when such scenario happens, when it immediately break to the upside, then suddenly downside, or vice versa, it's break downside and suddenly upside, then this is a leg where we are confused with. We do not know, because the next leg could be a pullback also, or could be again break to the upside. It's also possible. Recently it happened in the bank nifty. Let me first show you what happened here. This leg you see. That's why sideways markets are very much important to learn. You see, the market was continuously going up, taking a pullback, going up, taking a pullback, going up, and boom, breakdown to the downside. I do not know. After this swing is broken, I really do not know it's going to go down, because it's 100% possibility it could take a pullback and start going down. Don't you think? It could be a pullback and go down. So here is the point. Here is a deal. After the swing low is gone, after breaking the structure to the upside, after breaking the structure to the upside, right? This is a bearish stop loss, right? Gone. What it did, it broken the structure to the downside also, right? Bullish stop loss also gone. Now this is the point where we are confused with. We mark this point here. Let me change the color of this. Let me change the color of this also. So when it's now, this leg is a leg which just created a confusion for us, because we do not know the next leg is going to be a pullback leg. One second. The next leg is going to be a pullback leg and going to go down, or it was just a stop loss hunting of all the buyers and again is going to breach this high. So what we do in this scenario, this leg is a confusion leg, because suddenly when it broke to the upside and suddenly it break down to the downside, now the decision is pending on this leg. Now the decision is completely pending on this leg. If it has to go down, if really it has to go in downtrend, it will go like this and break to the downside. When it break to the downside, we are 100% sure now, after doing n number of thing inside, like going up down, and then it breaks down this swing low, we understand now it's a completion. It's a confirmation is going to go down like this, and if it's going to breach this leg, which it did in the recent session, right? It's breached overall, this leg at this point. Now it's a confirmation. It's going to go up. It's going to take a pullback and go up, right? So the decision is pending on this leg. So this market is called a sideways market. Number one, because here is very hard to trade, very hard to decide. So whenever use case number one, you will see when the market is going to breach to the upside. Okay, let me draw this for you, and market breach to the upside, then again to the downside at the same time. This leg, okay, this leg is very, very important for us. Mark it, and then the decision will be taken based on the break of this leg. So until it's not break, right, it's not broken, it's very hard to trade. And when this leg was formed on 5th May, from 5th May you see till here, when it's not broken, right, 10th May, there is no there is no confirmation of the trend. Some people might got lucky. I will definitely say the word lucky, because nobody knows the trend here. If you are thinking you are buying, you got lucky. Why? Because it's got the trend. It's a probability game. We do not know it's going to break up or down. So it's the luck. Here the luck factor comes in. So you got lucky. But if you think it's a breakdown, it could be a pullback, and then try to short it here and targeted this, they are out of the game. So whenever this kind of scenario occur in the real market, okay, when it's break up and immediately down, mark the highs and low and the range until it's inside. This is a sideways market. Number one, this is called sideways market. Number two, sideways market, which you had been taught all the time, which is just a use case of this, because inside this box, right, the market will not go anywhere, and it simply could go like this, again this, again this. Okay. Why? Because until this boundary is not clear, decision is pending. We do not know it's going to go up and down, and inside this boundary, it can play like whatever the way it want. It could play like inside, it can make some sort inside this leg, it could make some sort of downtrend, uptrend, again downtrend, uptrends. Anything is possible. Or it can also make a range inside this area. It can also make a range, like it's going up, going down, going up, going down, going up, going down, and then finally it can decide like, okay, I'm going to go up. Then this decision is clear. So this is just a partial concept is been taught to you so far. Not the actual concept is this, and inside this pattern reside, which is called a range. Do people don't know this? Those who are teaching to you, might be they don't know themselves. But what about those great traders which we follow? They also talk about this, but not this. They also don't know. Might be they know. Could be. Chances are very high they know. But why they will share every single thing to you? Was they born and brought up to teach you and make you trader so that you will be rich one day and make money? You will be living your life happy. What is their benefit? Zero. In this world, my friend, nobody do anything for anyone for free. There is a value always involved. If you are assuming, if you are in assumption, people are good, they can make it cheaper, but cannot do free. There is always an intention behind any free services, right? As a businessman, I can tell you that. Okay. And let me come to the point now, not going there. So this is called a range market, and this is what you had been taught, and always you try to figure out this, but in real life you will see this is called range. Okay. Inside this kind of scenario forms sometime, which we will see definitely when we will proceed. But you have to make sure when the market is sideways. When there is sideways means decision is pending. We do not know where it will go. That's it. That's all about this session. Thank you so much for listening, guys. We'll see you in the next video.